What's up? How are you guys doing today? Damo30 here, back with another training on smart money concepts. So today I'm going to hope to cover these four main questions that I get a lot of questions on. And those questions are, what is smart money? What are the rules and how do I trade it? What time frame can I use this method? And where do I enter? So let's go ahead and get started. Got my awesome diagram here. So the first question was, what is smart money? So I always get this question a lot. Smart money is a institutionalized way of trading where we're looking for the best places to enter. We're looking to not only focus on trend lines, support and resistances, but we're going to look for supply and demand areas. So it's very important when it comes to trading, because you want to make sure you're getting that best possible entry. But we know that the institutions or banks are the ones who actually move the markets. So we want to make sure that we are doing what the banks are doing, so we're not losing money like the banks don't do, right? So another question is, what are the rules and how to trade it? So I have three simple rules also with this amazing diagram that we're going to go over real quick. So rule number one. So no matter if price is moving up or down, right? So I have two examples. The first rule is to look for the last bullish candle in an uptrend or look for the last bearish candle in a downtrend. So if we go to our little diagram here, we look at the price as it moves up, right? So we're looking for the last bullish candle. Now, our last bullish candle in this scenario, the bullish candle being the blue, the bearish candles being the red. So the blue candle up here is the last bullish candle in this trend, right? Now, if we go down, right, we see in this bearish trend that the bearish candle down here is the last bearish candle. So that's the first step of what we look for. That's the first rule. It's very important that we find this because if we don't see that, then there is no smart money in this area. Second rule is to look for an impulsive move in the opposite direction. The impulsive move needs to create an engulfing pattern, engulfing the last bullish candle or the last bearish candle. All right, so we go back to our diagram here. This was the last bullish candle that moved up, correct? This was the last bearish candle that moved down, correct? As soon as this happens, we need to see an impulsive move go the opposite direction, right? So this means when this is happening, this means that the banks are now in the markets. They're done with the buying motion and they're wanting to sell, because when the banks get into the markets, they aggressively throw in a whole bunch of orders, right? So if you've heard order blocks, that's where they put them. They put all the orders. That's what that means, that they're putting all these orders in this one place so that way they can move the market in the direction that they need it to go. Right? So we get our impulsive movement toward the downside. And when we get that to happen, the candle that we want to get to start this engulfs the last bullish candle. Now, again, if we were going in an uptrend, we get the last bearish candle to be engulfed by a bullish candle. So those are the two main steps. Those are very important that you find both of those before you continue with anything else. If you don't see this, especially that first move, if you don't see that, then you want to look for something else. The third and final step or rule is to put a line at the open of the bullish or bearish candle as long as it was an engulfing pattern, right? So I have to stress that. It has to be an engulfing pattern. There has to be supply and demand in this area can only be created by an engulfing pattern, right? Because what happens is you lose the bulls are losing the momentum in the market to push it up anymore. So now they need to change the way that the market is going by putting a whole bunch of orders in at the same time in the same area, right? So with that happening, that creates this engulfing pattern that ultimately drops the market. So now once we found this pattern, we want to put a line at the open of the engulfed candle, right? So the engulfed candle in this situation is the bullish candle, you see? So that was the last candle that moved up. The red candle engulfed that candle, right? So we put a line at the open. So if you know how candles move, when you're going in an uptrend, if you open the next candle, the open opens at the top. As long as that candle closes at the top, then the next candle will open at the top. However, if we go to this situation, if it's a bearish candle, you see it opens at the bottom, so the next candle opens below it. So the open is at the top. So you always want to do the open of the engulfed candle, right? Once you get that, you put your line at the open of it. Now, to create a supply and demand zone, all you need to do is you'll take your Fibonacci, right, and you'll measure the body of the candle. You'll measure from top to bottom the body of the candle, and you will use that as an area to put your zone. What I do is I put it at the 50% always. So that way I create my smart money zone. All right, so that's what we did here. We put our line at the 50%, and now I have a zone inside of this, right? So another question that was answered is what time frame, or what another question was, what time frame can I trade this strategy on? So this strategy can be traded on any time frame. If you ask me what my opinion to trade it is, I like to trade it on higher time frames. I'll usually start from the daily and I'll work my way down. I personally do not look for smart money setups or concepts on the 15, 30, or 5 minutes, so the lower time frames. However, I will definitely, if I were looking at indices, I would. So that's just the way I do it, but I've definitely seen the success rate in it on any time frame, but that's just my personal preference. So any time frame can be traded with the smart money concepts. The next question is, how would I know to enter? Where would I put my TPs? Where would I put my stop losses, etc.? Right? So if this were our zone, right? So price moved up, right? We created our last bullish candle that was engulfed in a major move down, right? So we put our line at the open. So whenever price starts to make its way back, we have an area of where we're going to put, right? And how I do this, just to make sure that I am following the way the markets are going, but not actually on the charts, is I put an alert, right? So very powerful to use TradingView to do that, or call levels. What I do is, let's say price wasn't exactly here yet. Let's say this is where price is. Price sits on this merry way up. All right, so we're going to move this line, and we're going to say we're going to put an alert here. All right, so this is where price is. So when price starts to move up there, I'm not paying attention until the market actually crosses my place of where I want money to go. And I don't put it actually at smart money because I don't want to catch it too late. But I put it maybe a few pips, if I'm trading indices, a few hundred pips before my smart money zone. Or if we were talking about at the bottom above my smart money zone, right? So I'll put my alert there. Once price crosses over that, I'll know hey, I need to look at this market. But the concept of what happens after that is we will see price come up here, just like so. Might push up in between, or it might push, just right at the line. As long as it taps the line, that's the major thing for me. It has to cross over or tap. It can't be, a few pipettes below, can't anything, because I want to make sure I get the best possible entry. So with that being said, price will look like this. It'll come up here, it'll snag those orders there, and once it's done what it's got to do, it'll drop. All right, so the idea of this is going to be one of your confirmations in order to enter this for a sell here. Now, I do get another question too, bonus question. How do I know if that's a valid line, right? Or how do I know that's a valid place to enter trades, right? So what I do is I add all my other confirmations. For me, I need 4 confirmations to enter any trade, right? So one of my confirmations being smart money, right? So I might take a trend line, based on whatever the trend is doing, a support and resistance zone, head and shoulders. Those are just a few of the things that I look for. Fibonacci is definitely one of them as well. But those are the things I look for. So the idea of when this trade happens is you want to enter, right? You want to enter in the best possible area, which would be inside of your smart money zone. And you want to put your stop loss above, you want to look left, you want to put your stop loss above here. All right, so you want to put it above. So in this situation, so if it were below, you want to put it below the wicks. If there are wicks here, you want to put it above the wicks. All right. And your take profit, I usually go for a 1-to-1, or I followed structure, whether it's another smart money zone. So if this were a smart money zone down here, for the sell, I would take this down and I would sell it to here, or support and resistance. Or I might measure the retracement and say, hey, I'm going to, sell down to the 618% on the Fibonacci, and that's where I'll exit the trade. Now, one last thing before I go is there is only one thing that makes this trade invalid, and this is why you want to follow all your confirmations and make sure you have multiple confirmations before you enter a smart money trade. And that is if price happens to close. All right, so let's go ahead and if price happens to close above here, and I'll even say above the candles, the smart money zone is now null and void, and you would want to make sure you look for other smart money areas to where you can enter. With all that being said, this is Smart Money. I hope you guys all enjoyed. With Damo 30, you guys have a wonderful day, and see you guys at the top.